All right, welcome to the weekend video. This is Enda here from bullwaves.org. Quite an interesting week again. So get over to bullwaves.org, become a member, and you'll get nightly Elliott wave analysis. That's what I do. Bit of a messed up intro there, but that's the way it goes here in a one-man show. So I'm going to go through the markets. Let's get to the charts, and we'll see how we fared out this week. Okay, it's funny enough, we're pretty much flat on the week in euro dollar. I'll go to the larger chart here. I'm going to go through the dollar crosses first. So here's the larger chart. This is the 4-hour chart. You can see tracking this wave 2 pattern down here. So expecting another leg down is what I have been expecting, another leg down in euro dollar. This wave B high seems to have gone on. Well, it went on a little bit further than I expected, but yesterday and this morning we are turning lower in a pretty convincing fashion. What I'm looking for is 5 waves down in wave C, and initially I'm looking towards that kind of 102, 103, 102 area. If we get a 62% retracement, that'll be down on 101. I don't think we'll get parity again. Don't hold me to that, but I don't think we'll get parity. But I do expect a 5-wave decline back towards about, we'll call it 103. And once we do build that second wave higher low, then I think there'll be a sharp rally up in wave 3. And I think it'll be a sustained rally. I think probably talking about a few months as this next leg up continues. You can see in the larger chart, I am expecting probably a rally up to about 130 again. 125, 130. I mean, it's not out of bounds at all, but I think we need to build that significant higher low first, and this will be a large C wave rally. So again, next week, let's see if we can sort out that higher low in wave 2, and then set up for a rally in wave 3. And I think that rally in wave 3 is probably going to go back above 120 again. So it's going to be a long one. It's going to be it'll be a vigorous rally, I think, in third wave. It'll be a wave 3 of C, so this is not going to go on forever. But I do see probably a few months of a rally in euro dollar coming our way pretty soon. Okay, let's get to the hourly chart. You can see here the initial decline. That's the wave B top. So this is an ABC decline. Wave B top comes in at about the 78.6 retracement, 109.29 yesterday. We returned pretty vigorously off that. We do have a 5-wave pattern here. I'm not sure if wave 1 is done yet, but I was pointing last night to the wave A high. If we broke that wave A high in a reasonably impulsive fashion, then I'd suggested that probably wave 1 is underway. So it looks like wave 1 is underway now. We're going to go for a wave 2 lower high, maybe by this evening, but possibly Monday evening, and then next week will be further downhill as wave C completes. And again, I'm looking at probably about the 103 handle, maybe 102.50 for wave C to complete. So next week, looking lower, 5 waves down. That was a long-winded explanation of the pattern, but anyway, a pretty similar pattern actually in cable. We've got this reversal happening off a B wave high, so possible A wave down, B wave up, and looking for wave C down. Again, looking towards, at a minimum 118, possibly towards 116, depending on how the decline goes. If wave A equals wave C, we'll probably get towards 116.50 or something like that. And then a longer term, or a more medium term rally in wave C up again, back towards about 130, maybe 135 for wave C of 2 in cable. But that's in the future. That's in a month or so's time. I should be talking about that. But for the moment, I'm going to concentrate on wave C down, and let's see if we hit that minimum target of about 118. Here's the short-term pattern. Was looking at a possible ending diagonal wave 5 of C last night. turned lower this morning. Can't confirm wave 1 down yet. We haven't even broken the previous wave 4 low, but we have dipped below the wave A high. So interesting developing pattern. I think we could be topping on a B wave, beginning wave 1 of C to the downside. We should know more by the end of today's session. I've been looking at that 120 level at this B wave low to confirm wave 1 down. So 5-wave decline into about 120 would do it to confirm that wave B is done and wave C is underway. Okay, let's get on. This is dollar yen tracking this wave 2 again, kind of a let's say a polar opposite um, for dollar yen. A wave 2 decline is, I think, almost complete. And just like I'm looking at a C wave decline coming in the Atlantic crosses, I'm looking for a wave 3 rally in dollar yen. So kind of like the flip side of what's happening in cable and in Eurodollar. So if this kind of this pattern holds, I think there's a significant rally coming in dollar yen. There's a significant rally coming in the dollar across the board, really. Dollar rally means trouble for gold, and a dollar rally means probably trouble for the stock market too. So wave 2 higher low still holding. Let's get to the hourly count, and you'll see what I'm looking at in terms of the internal pattern. So we've got a 3-wave decline in wave A. Wave B is quite a choppy rally in wave B, but I'd say it's probably 3 waves anyway. And then since then, we're looking at, again, a possible ending diagonal pattern in wave C in green here. So we're hitting, again, the 78.6 retracement level. We're back at a previous corrective higher low again. So, this is 3 degrees higher. So we're working at a higher low at 3 degrees higher, forming around the same level at that 129 level. So if we are going to turn in Eurodollar, I think we'll probably turn higher in dollar yen pretty soon. So I would like to see a break, let's say above that 133 level in wave 1, or to confirm that wave 1 in green is underway. But the wave 1 rally should probably make it up to about 132 or something like that. And once we break above that previous 4th wave high, I think we'll probably lean very in favor of the bullish pattern here. Okay, let's move on. This is the stock market. Again, rolling over this week. The pre-market this morning is turning lower. The pattern off this possible wave 2 high has not kind of revealed itself impulsively just yet. But, the main accelerations are coming to the downsides and the corrective patterns are to the upside now. So it was the opposite way for the last week, but we may be turning the tide here. You can see on the 4-hour count now we've broken below the 50% retracement level. We've basically failed, we've broken below the 50 MA there, 50 period MA. On the 4-hour chart, we've basically failed twice at the 200 MA now. So we've got a second wave failure here at 33,560, and we've got another lower degree second wave failure here below the 200 MA again at 32,760, this week's highs. So that's a pretty, the last time that we've had a failure at the 200 MA was a B wave high back in September last year. Ever since then, the 200 MA has been supporting the rally. Now we're starting to fail at that level again. So we may be looking at a roll reversal here. Let's get to the hourly count here. You can see that I've got that series of 1-2s kind of cresting and turning lower again. So like I said earlier, the impulsive looking moves are coming to the downside now. So we have to see how today's trade plays out. But I am looking for a third wave decline within a third wave. So a third wave of a third wave. So we should see. I know. I mean, if you've been following the weekly videos, you know this is where I'm going anyway. But we should see a third wave acceleration lower. I'm looking towards a minimum target about 3,600. I would like to see a break below 30,000 again as wave 3 in pink develops. I think we probably will as 5 waves forms down in wave 3 pink. But just tracking the pattern now in a possible third of a third acceleration lower, and we'll see how that goes. So next week is looking very interesting in terms of this reversal pattern and a possible acceleration lower into wave 3 of 3. So we'll see how it goes. Now, here's the gold count. We did break to a new high this week. Again, looking for a substantial corrective higher low. We just haven't got it yet. We had this drift lower off that wave 1 green high. I'm not even 100% sure whether this isn't B wave high and we'll get a further downdraft into a C wave decline back below 1700 again. I would call that a solid alternate, let's say, alternate count here. If I don't have, where am I going with my? Forgive me. Insert. I forgot where I should be looking for my things. Shapes and rectangle. Okay, that's a solid possible alternate count, and the very fact that people don't think it's going to happen, that really raises it on my radar as a very real possibility here. So if this is only wave A down and this is only wave B up, then wave C wave 2 is an expanded flat correction, and wave C will break below 1800 again, possibly below 1700 again. So, I know I'm sounding quite, counter trend, or let's say contrarian at this point in time, but I do like to get contrarian at extremes in markets, and we are at an extreme in this market, whether you want to believe it or not. Momentum has slowed down this week. I'm looking at a possible wave 2 in blue here, which should form a higher low. I mean, if this bullish pattern holds, then wave 2 will probably form a higher low, probably somewhere down around 1900 again. Let's get the hourly count and I'll show you what I'm thinking. Again, a possible B wave high, 3 down in A. I'm not sure you could call that 3 up in B yet anyway, or maybe it is, I'm not sure. But I'd look for a B wave lower high and then a 5 wave decline in wave C of 2. Looking about that 1880 level if this pattern is correct. But if the alternate count is correct, then looking below 1800, possibly even lower, possibly 1750 again. Okay, let's get on to crude oil. Crude oil has pretty much, marched to the beat of the wave count step by step this week. So again, we see a failure not only at the 200 MA on the 4-hour count, we see a failure this week at the 50 MA. And again, this doesn't look very bullish right now. You could also take the contrarian view here that we're going to see a rally. This the contrarian count here, or the alternate count would be for an expanded flat correction wave 2 in blue. I can't rule that out at all yet anyway, but we do seem to have accelerated lower within a possible third wave, and we failed again at 50 MA. So the short term, or the hourly count here I'm looking at, is a corrective lower high again at wave 4 in blue, and tracking a possible 5 wave pattern lower in wave 5 in blue. So this 5 waves down in wave 3 should complete down somewhere around $63. You can see that on the 4-hour count here. Looking at about $62, $63 for this wave 3 in green to complete. The Fibonacci grid suggests we get somewhere down around 59, 58 for the larger third wave to complete. So that would be wave 3 in blue. If I get that out here, wave 3 in blue. So that wave 3 in blue is where wave 1 and wave 3 would reach equality. So the very real possibility here that we continue lower in this third wave line. I would suggest that the inflation narrative is pretty much dead right now. Crude oil called it dead a long time ago, as you know, the dollar was dying. Crude oil, internationally traded crude oil products, or the crude oil market was turning lower. As people were saying, calling the death of the dollar. Its main trading commodity is actually turning lower and lower and getting cheaper and cheaper in terms of dollars. So, maybe this is calling the bluff of that long-winded inflation narrative. A third wave decline in crude oil suggests that inflation is dead and most likely deflation is on the way. So, I think the short-term or the medium-term treasury market is pretty much screaming that right now. We haven't had it. We haven't had that spillover into the stock market yet. Excuse me. Oh, excuse me. We haven't had that spillover into the stock market yet with a downdraft and a third wave, but I think we're getting there. People just find it very hard to accept it yet. So anyway, crude oil looking lower into a third wave. We'll see how that pattern trades today. Okay, here is the S&P. It's a 4-hour count in the S&P. Slightly updated this week. 5-wave decline in wave 1 in pink. Second wave lower high in. Excuse me. Second wave lower high in wave 2 in pink. Possible beginning of a third of wave 1 down here. So third wave decline. We should break below the wave 1 low again with ease. So that's about 38.06. That's short-term support here. We've got a long-term 4-hour support here at the B wave low. That's 37.62. So wave 3 of 1 should slice down through those levels pretty quickly. Excuse me, I've got probably some sort of hay fever or something going on. Okay, so wave 1 and 2 possibly done. Looking for a third wave decline next week. Pretty much in line with the Dow. We had a pretty complex correction higher this week in wave 2 in pink, which topped out just below the 62% retracement level, and then we spiked lower, a series of spikes to the downside. We haven't confirmed this wave 1 of 3 just yet, but I think if we break that wave B low, this is what I've been saying to subscribers on the nightly update, is 38.70 there at the wave B low. That should be a strong indicator that wave 1 of 3 is underway. Probably early next week, look for a lower high in wave 2, and then again, kind of a downdraft move in wave 3 of 3 coming our way in a S&P 500 near you. Okay, let's move on to silver. The count in silver is, or the rally in silver, has kind of been has held on for dear life this week. Pretty certain that this is a slowdown, a momentum kind of death on the 4-hour chart here. Anyway, off an extreme, we're kind of turning lower. The internal pattern of this wave 1 is pretty much done. Still looking for that significant higher low in wave 2. So that'll be wave 2 of 3. I should probably. I'm gonna label this at 1 degree higher on the 4-hour count. But I think that second wave should decline back below $20 again. If we get any worse than that, I'll keep you updated. But anyway, this 5th wave pattern it's got some legs on it this morning, but in general, I think the larger chart there is showing that we are due a very significant reversal here. I think it'll be a corrective reversal. We're probably looking at the previous 4th wave low here, about 2140. but we shouldn't break 1990 again. What a good year that was, 1990. 3 waves down, threaten maybe even $20. Threaten below $21 again. But we do need a bit of a shakeout here in silver. Okay, let's move on. What should I say? What should I go to? I'll go to the German market. You can see this week we had an expanded flat correction wave 2. We just pipped the 62% retracement level, and now so far, even this morning, the DAX will be an hour ahead of where I am, so it's 2 p.m. or 1:49 over there in Berlin. So we're well into the day there, and we're trading significantly lower off the weekly high. So closing the week, possibly beginning a third wave decline. Haven't confirmed that pattern yet, but I think if we break the extreme low of wave B there, so that'll be about 455. Is it 455? Somewhere around that, 14460. I think that'll confirm wave 3 down, but the wave 1 low lies at 14660. So we're heading towards that level pretty quickly right now. The Fibonacci retracement level worked out pretty perfectly for wave 2. The internal pattern for wave 1 and 2 is pretty good, suggesting a third wave decline. Let's see if we get that next week. The FTSE is pretty much following along on the same steps. We did actually reach a new all-time high, or more or less all-time high, in the FTSE a couple of weeks ago. We've reversed pretty strongly off that now, and we are heading lower powerfully, I think, in the FTSE. Probably a slightly different pattern. Wave 1 and 2, either we're done in wave 2. If this pattern is like the DAX, then it's an expanded flat correction wave 2, and we're heading into wave 3. If wave 2 is like I'm suggesting here, a simple zigzag correction higher back towards about 770, 7720. 7720 would form a pretty significant lower high in wave 2 before, let's say, again, that downdraft into a third wave comes our way. Now, I think that's pretty much the market's done. Thanks for watching. Go over to bullwedge.org and check out Nightly membership if you are interested in nightly Elliott wave analysis. Okay, thanks so much for watching, everyone. And if you're listening at this point in time, hanging on for the end of the video, then you're here for the ride of your life. This is the call to salvation. Never mind your bank account. We all die poor. Every single one of us has not a penny as we cross over that divide. The only thing you can take with you is your allegiance. Are you allied to your creator God, or are you allied under the headship of Adam, under the owner of this world, ruler of this world, which is the devil? So you take your allegiance with you. That's what you carry across the divide. Come to salvation. Yeshua, Hebrew for salvation is Yeshua. Jesus, he died for your sins. He asks you over. Believe in him and you are saved. That's pretty much it. Believe in the Savior and you are saved. Just like the thief on the cross. We're coming up to Passover. We're coming up to the greatest event in human history. The yearly commemoration we do of that as followers of Yeshua, as followers of Jesus, as believers in the good news. That event split time in two. That event offered us a way out from under the headship, or under the leadership of the ruler of this world, to the leadership of the ruler of eternity. So there you go. You accept Jesus as your Savior and confess it in your heart to God. That's it. It's done. By the way, Jesus is God. So there you go. Okay. I'll leave you and love you. And if I'm still here next week, I always end like this. If I'm still here next week, I'll be back. And sorry about my cold or hay fever or whatever it is. Hopefully it'll be gone for next week. All right. God bless. Bye bye.